What's going on, everybody? This is Dan French. It's another French Workbench podcast today. I'm in studio with some familiar faces here, and wanted to really appreciate everybody joining in on this show. And also, if you guys have any questions, we're going to have a phone number up here very shortly, and we're going to bring everybody in here today. So we're going to talk today about what's happening in this housing market. We got a market analysis. Patrick Hennessey, he's from Tabrasa. He's coming in today. He's going to talk a little bit about what's going on with the market. We got Brett talking about what's going to happen here heading into next year, 2022. Is now a good time to buy or should you wait? We also have a home warranty guy here. He's been very seasoned in the home warranty industry. Also, he's a real estate agent, and we're going to talk with him. It's Scott Hogue. He's from Dwellness. So let's go ahead and introduce our couple of guests. What's going on today, Mr. Brett Jenny?
Not too much, man. Just, doing my thing. Already working some real estate this morning before I came here.
There you go, man.
Here I am, and then I'm going to do some more when I leave.
Yeah, you were out and about today. You were already meeting somebody today,
had
right?
to meet a buyer at the design studio for the builder.
Gotcha. So we also have another person here. His name is Scott Hogue. He's from Dwellness. And Scott, what's going on, buddy? How are you?
Living the dream, man. How about you?
Doing well. I know we have a lot of good information today. We're here to try to help everybody out there really just give an insight on what's going on all facets. And we're going to bring on a market analysis here today. He's going to be a person that's going to let us know what's going on in the economy. He's also going to let us know what rates are possibly going to be doing. And so we're going to bring him on here in a second. And first off, man, it's great, isn't it? Saturday, right? Great weather.
Beautiful day. He's breaking out a scarf and breaking out mittens. That's just the way it is when you're accustomed to this.
Yeah, it's just not as hot as it's been, right? So that's the situation we're looking at. What do you guys think, man? What do you guys think about this housing market so far? Do you guys think it's pretty hot, huh?
It's continuing on. I mean, still low supply, still a good demand.
Yeah, it's interesting.
Maybe things are cooling a little, but
yeah,
I haven't really seen it in an overall perspective of that, I guess,
Well, let's go ahead and bring on our guest, and I want to talk with him here for a second. So without further ado, we're going to talk to Patrick Hennessey. He's been on here before. He's from Tabrasa. He's a market analysis. And Patrick, you on the phone there?
Hey guys, how's it going?
Good, man. What's going on with you? How you doing today?
Not bad. The big word, that's been going on for the last week or so is inflation. That's the big word.
That's the big word, and I think everybody's looking at why rates are going up, right? I mean, that's like one of the things that's glaring at people. So why are mortgage rates headed up? Do you think this is going to continue? Because, when you look at the economy and you look at what mortgage rates are doing and where things are headed, I think a lot of people want to strategize as far as where they're going to be at,
of course,
and where the rates are going to be at, and should I buy? And this is going to kind of coincide to what we're going to talk about here heading into 2022. So let's look at the economy overall, Patrick. So where is this economy at right now? Are we still thriving? Are we coming out of a recession? Right?
Yeah, I mean, we're coming out of the pandemic-induced recession that occurred beginning last March of 2020.
Right.
And the whole economy shut down for a year or so, and now we're getting the reopening. Most states are open now. The consumer demand is pushing higher. We have, of course, still have low interest rates in the housing industry. The housing market, like one of the other persons said, is low inventories right now. So that's one of the problems that we're seeing. But as far as rates, I mean, let's face it. Rates were, at 2.65% back in January for 30-year fixed. And, that was like never land. But,
yeah.
I mean.
Do you see that ever coming back, Patrick? I mean, people always want to know, rates are historically low, but is that market ever we're going to see that ever again where rates were that low, 2.5%?
Well, we'd only see that if we get that type of environment, it seems like. I mean, that was really, really ultra low. Right now we're around, 3.18 that the NBA had. The Freddie Mac came out the other day. They were about 3% or so. I mean, right now they're probably going to, just move a little bit higher as the economy gets better. And that's only natural. I mean, we're not going to see in the fairy tale land of 2.65. and right now we're around 3%, 3.125%. We could move up to 3.5% by the end of the year, early next year. But the factor that we're seeing right now, the catalyst, is the Fed. The Fed continues to purchase mortgage bonds and Treasury securities on a daily basis.
That's the thing. You're exactly right. They keep on purchasing them.
So with the interest rates starting to increase, I'm seeing a lot of people that are looking to refinance their home now, and it's because I feel they're going to miss the boat. They're gonna miss out on these low interest rates, and I think it's still a deciding factor for people in this market, even though we have an overpriced market, in my opinion. You got list price homes out there, people putting way above asking price. But you look at the rates, and I think that's still driving people to buy homes because they know that's the other part of it.
That's the thing. So anything extra that you're paying, you're making up for on your mortgage payment.
So you see that rates are going to obviously creep up. Could you see that we're going to go up to 3.5% to 4% with it by the end of the year?
4% may be a little bit of a reach, just because of the fact that the Fed still said the other day that we're still a long way on the employment side. Now let's face it, jobs buy homes, right? I mean, when people are, steady in their jobs, they feel they have a job, or they feel they can easily get another job if they leave the job that they have. That's more of an incentive, or not an incentive, but it helps the housing industry and purchase demand when jobs are better. I mean, right now, yes, we know that there are 9 million jobs available out there. And there are a lot of people still not working, maybe because of that enhanced employment, but that's a lot of service sector people. So I mean, that's another whole story also, because they have to get back to work, businesses, but that's another different story. But as far as rates, I just don't. Maybe not 4%. 3.125%, because they go in cycles. They go up a couple of weeks, 2 or 3 weeks, and they come back down again. So we'll have to see what happens here. I don't see maybe 4%. It could hit 3.5% maybe by year's end. Even Freddie Mac yesterday, or on Thursday, they came out and said it's basically the same thing. As the economy gets better, rates will just edge higher.
Fed's point is to calm the market. They go from now to 4%. They're gonna freak people out, dude.
Well, it's
exactly.
Like in that short of time.
Yeah, it's a balancing act, though, right?
So that's why maybe by the end of the year you may see 3.5%. The Fed doesn't want to, put anything into the market that's going to really disrupt it at this point.
They have a balancing act that
Calm
they
and
do.
steady wins the race.
Yeah, absolutely. They have a balancing act that they do, and so I'm just trying to see, what happens if you see that the inflation rate's getting higher. Is that one of the tactics they use is to increase interest rates? Is that right?
Yes. Well, let's talk about inflation for 1 minute. Inflation has happened because back, of course, in March of 2020, the whole country shut down. That meant goods that were, that were consumer goods weren't produced as much. Lumber wasn't produced as much. Then all of a sudden, demand started to surge, and then we have, all these goods that maybe were supply constraints, and that means that what happens if not as many goods for the demand, prices start going up. So we knew the surge in inflation was coming back in January and February when the economy was starting to open up.
Right.
So we felt that we were going to get hot inflation in April, May, which we did. June, we just got it the other day. We had the core PCE go to 3.4%,
wow,
which is the highest 1992.
Wow.
But the catalyst here is the 10-year note yield. It's only at 1.52%. If it thought that it was going to be runaway inflation, it would be at 2% or maybe more at this point.
Yeah, but that's the barometer that they use, right? 2%. Is that right, Patrick?
Well, I mean, as far as the 10-year yield, it moves up and down, of course, but we see it in a range right now of 1.5 to maybe 1.75. And right now, the 10-year yield and the bond market is telling us that they're basically shrugging off inflation, because if inflation was a factor for the bond market, like I said, the 10-year yield would be much higher than it is now.
Right. Right. So let's talk about the 10-year yield. Is that really in comparison to mortgage rates? Like, does somebody use that as also a gauge that rates are going up or down? And how does that correlate?
Well, I mean, of course, the mainstream media, they feel that, the 10-year yield governs rates. But,
Right.
We feel, and of course, the Federal Reserve has stated it, that, essentially mortgage-backed securities or the underlying security, with that smooths mortgage rate.
Yeah.
Now, the 10-year yield's a barometer of the economy, but right now, because it's being, not manipulated, but it's, the Treasury, they're buying Treasuries every day. It's not really a normal cycle.
Right.
But usually the 10-year yield, when the 10-year yield is high, it means that it's a good economy because of the fact that people are selling bonds because they feel it's a better economy and buying more riskier assets. So as
Absolutely.
they sell bonds, the prices move down and yields move up, and vice versa. So that's what we've been seeing. I mean, the 10-year yield, like I said, the bond market right now is shrugging off any inflation fears because, Fed Chair Powell keeps saying that it's going to be transitory.
Mm-hmm.
Inflation, that is.
If you guys are just tuning in, we're talking to Patrick Hennessey. He's from Tabrasa. He's a market analysis. He's giving us some insight on what's going on with the economy. Also, what rates are going to possibly do. Nobody has that crystal ball, but I mean, some of the data that's come out is supporting some of these things you're talking about here, Patrick. So,
I mean,
go ahead.
Not to interject here quick, but to interject.
Go ahead.
I'm obvious about my interruptions.
That's
Anyways,
all right. I like it.
So, like we were discussing, I think with Chuckus on Wednesday, which is what I said I was reading, is that home prices have gone up on average every month since November 2012.
Yeah.
I think every month for the past 9 years, home prices have gone up.
Right. Mm-hmm. I mean, it's true. Absolutely.
But it didn't go from 0 to 100 overnight. It took 9 years.
Right.
So
100%.
I mean, more of a case for things being overpriced right now, but the totality of what's leading up to this is.
So, Patrick, we talk about what's happening in the economy. People right now are financially, some of them are financially strapped. Some people maybe have enough money for down payments if they're buying a home. We know that, the GDP for home purchasing, including materials, also, rehabilitation on homes, all of the housing market in general is about 15 to 18% gross domestic product. Do you see this economy and people continuing to buy homes, or do you think that this market is going to start to open up with homes because people just don't want to pay more than what the value of the home is? I mean, at some point, when does that thing start to turn?
It'll probably, ease off a bit, because what would happen, from March, beginning last March, we saw, not March, but maybe like in May and June, we saw a big move from, more like city dwellers.
Yeah.
Wanted to have more room, and maybe move out into the suburbs, because they were working at home. So there was a big surge for homes. I mean, that's probably contributed towards, the move up in price and the low inventories. So, I mean, eventually that'll probably slow a little bit, but, you guys probably know better than I that, people still need homes on an everyday basis. People still need to buy homes,
I just think at what capacity, though, is it where people start to say, you know what, too much is too much? That
will be determined.
The complications
when that point hits.
Yeah.
I think it's going to be a...
we'll be noted. No, go ahead.
I think it's a component also with less on a macroeconomic level, but more here locally. You have a tremendous amount of California cash-rich buyers coming in.
Oh, yeah.
Okay.
Yep.
Now, if I'm coming in
big capacity
with, let's say I'm buying a $700,000 home and I come in with $400,000 cash from equity that I sold for my house in California.
Sure.
Is rate sensitivity a big issue to me?
Probably not. I think though, like it's agitating, I think, to some people where you're paying overpriced and it's the biggest investment you buy, the moving process and also just the time process to get everything in place. I do think that kind of deters people from saying, you know what, is it really worth it? And I'm overpaying for a home. And I think some of those are contributing factors.
just so you know, this is his reference points is he just had this scenario too.
Oh yeah,
Personally himself with his own house. He's telling you from personal experience that just happened in this market.
Yeah, I just overpaid just because the house was on the market for 3 days, and I needed a house because my other house I was already up for sale. The clock was ticking.
Right.
So I overpaid, which not a tremendous amount, but it was okay.
Sure.
But like the people I'm talking about from the whole California land rush, if I'm coming in cash heavy, then if I have to overpay a little bit, it's no big deal. It's kind of like if I go to a foreign country and things are so cheap. If I'm in Vietnam and they go, "Oh, you're going to pay $3 more," okay,
that's a great analogy, man.
Yeah,
that's a great analogy.
So I think that's one of the issues driving up price is because people are coming in from a highly inflated market in Southern California and coming here going, "Oh, is that all?"
Yeah.
And I think you're going to look back and you're going to see a huge migration in our history books of people that started making the migration more to the country, more to rural. First it was the inner city, then it was the suburbs, and now it's a whole nother. And I think you're going to see that, man. It's accumulation of a few things, including lowest interest rate we've ever had.
Yeah. Patrick, are you seeing that as well where you're at? I mean, you're on the East Coast, right, Patrick?
Yes.
Okay. Are you seeing that transition that you're talking about in your own city as well?
Oh yes, we've seen people from New York coming over to New Jersey. We've seen it a bunch of times.
I bet
that's been happening.
Yeah, it seems like there's is it really that much lower of a cost to live there though? You know what I mean? Like, is it that big of a difference?
Jersey is not Connecticut.
Well, but is it the homes that they want because the home size is a lot bigger? They can get a bigger home versus say New York.
As far as that, there were a lot of city people came over, but then a lot of people that just also sold because maybe it's a little cheaper here. But as far as taxes and your home taxes and car insurance, it's pretty expensive in New Jersey.
Right. So the average person out there, we all talk about the economy getting recovering. Are they able to really kind of establish themselves in your city and are they back to work? Are they having any issues as far as saving money, or what do you see out there? Like, do you see people struggling? Like, what is the economy good there? Is it booming there? What's going on over there on the East Coast?
Well, here on the East Coast, I mean, as far as New Jersey, I mean, it is the economy is getting better. Like I said, the people that were impacted by this were the small businesses and the service sector. Everybody else, like myself, who who have jobs, stayed in jobs, and so and now that the economy's getting better,
right? The
service people maybe are coming back, and we're doing pretty good over here on the East Coast.
Are you guys seeing, how like as far as the recovery, right, and people going back to work, are people still, because it seemed like I read something recently in an article that said people have the ability to go back to work, but they're choosing to stay home. They don't really want to go back to work. They don't want to go and drive and have that commute. And I don't know, it just seems like there's a lot of opportunity for that. And we're starting to see that a lot more, right?
Yes, and definitely. And then that's why they need bigger spaces. That's why they move to the suburbs and they're getting a bigger space.
Absolutely.
So they can work at home, But in New York now, they're trying to tell people to come back, so we'll have to see.
Yeah, what's enticing them though? Higher cost of living? You know what I mean? It's like, why would I come back to New York? I mean, the shows are great.
I won't get too on this show.
Yeah, the shows are great and everything's great, but I mean, if I'm going to be able to live more comfortably, I don't know if I'm coming back. One of the things I want to say about the housing market, and I want to go back to reference of the mid 2000s when we had, I feel like Las Vegas really felt those effects, that crash. What's different in your eyes that you see in the mid 2000s versus this market? And do you foresee anything happening similar to that market?
No, because right now, as we know earlier, we had liar loans, we had, you guys know all the, so right now the underlying base of the real estate market is in better shape, just because, like I said, there's more regulations that were put in. Yeah. People won't default as easy.
Everything everything that's happening right now can be correlated and validated. with
Right, exactly.
with valid
Right,
reasons of
right.
of why things are right now.
Right.
That's the difference.
What do you? Well, let me say this: do you think there's going to be big effects? I know we just extended the mortgage moratorium. Do you think that that's actually going to produce foreclosures, Patrick?
Oh, it definitely will, but I think they're going to work more with the people this time around than
Right.
maybe
Yep.
in the past.
All right. Well, listen, man. Any other last thoughts? I appreciate you coming on the show, Patrick. We're going to head on to the other topics here, but anything about mortgage rates or anything else that maybe you wanted to include, or you pretty much summed up everything?
I would just say right now where they are, I think it'd be good to get people into a file and try to get them into refinance or to purchase at these levels.
Yeah, it's interesting you said that. I had a few people actually reach out to me to refinance their home, and all of it is just cash out. Yeah. It's crazy, but cash out or paying off debt, and there's people are paying attention. You got this people that are really looking at stuff online.
Why would you not with the rates?
Yeah.
I
100%. I mean, but they're starting to see that rates are starting to tick up, and I think that's the saying.
Slowly, but they're still, slowly. Still, you can still take advantage and come out in the winning end.
I think more people are paying attention to things online. They got more data, more information.
Yeah, of course.
Right. So now it's like, what? I see just any slight movement, I'm going on to it. And I'm gonna do it now. Yeah, and they don't want to hesitate because that's one of the driving parts of what's going on in this housing market. So, Patrick, I appreciate you coming on, man, and giving your insight. And we'll have you again on the show down the road. And it's always a pleasure, man. I learn a lot of information from you.
Sounds good. Thanks, everybody.
Thanks, Patrick.
Weekend,
appreciate
Patrick.
it.
Thank you for watching an episode of the French Workbench Podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio-only options, we do have iTunes and SoundCloud.